Hey guys, welcome back to the channel. I want to go over a few things in this one that we brought up in our group. We have our Discord group. We have all of these scanners that you see here. These are all scans that I have built, custom built, and you might hear them actually because I'm taping this while the market's live. But I wanted to go over a few of these alerts and how to trade these alerts. So we don't just blindly trade these alerts as soon as it comes up on our scanner. The scanner is like a radar. It helps us identify value in stock. So we then pull up that stock's chart maybe, and then or I'll pull up the chart, and generally I'll mark levels of support and resistance that I see as fast as possible. That way I have a reference of where I want to maybe enter, or where maybe pressure is going to enter into that stock. So maybe I don't want to buy it because maybe I see a resistance just ahead of it. So these are the scanners that we're going to have here. We have our gap list over here. So our lead gappers, it's going to go from lead gap percentage wise down, and you can see the float size here. So generally I'm trading low float stocks, so they're pretty volatile. They're going to go really fast up and just as fast, if not faster, down. So keep that in mind. But one really great alert or trade that we've been getting lately in our group is these RSI Oversold Alerts. So I set up these alerts, and let me pull up my Discord over here. Switch over to another screen. There we go. So what we're seeing here is you can see at this time of day, 11:42 a.m. this morning, we were getting alerts on RSI Oversold. So this was an RSI RVSN. RSI enters oversold. Price equals $1.66, and the volume on that candle was 104,000 shares traded. So we can see here that we had multiple alerts. If I hover over this one here, you can see it was 11:48 a.m. So between 11:42 to 11:48, we got multiple alerts, basically all alerting the same thing, except we can see this one right in the middle here. This is a little bit different. This one is RVSN test support level of $1.64. So what this is telling us and what these alerts are, and I'll pull up the chart. Let me move over to my charts now. All right, and move this. So I have RVSN here in the right hand corner. So these are just 4 1-minute charts of a few stocks that I can keep watch. That way I'm aware of what's moving. But so RVSN, it started hitting the scanners a couple days ago. So I went in and I marked these lines, these white lines, which are just obvious support and resistance lines, using a wider time frame such as the weekly or the daily time frames to mark areas of value or areas of resistance. Right. So these are just common support and resistance lines. You can move them around, whatever, but these are what they are. So I always tell my group that these are major weighted lines or areas of value or interest. But let's keep in mind the half and whole dollar at all times. So in this case, we have a 211 resistance. So I would also keep in mind that $2 in general, being the whole dollar, is a mental or organic level of interest as well. So you may see resistance at $2 rather than the 211, but you may get you may break through. In this case, we broke through and saw 206. So I don't use the line as an exact number. I use it as an area of value. So if I'm looking to enter on a support level, then I'm going to maybe be entering around that area of value. And if I'm looking to exit, then maybe I'm either exiting right below, maybe right on, sometimes above. It depends really on the volume. But so these are just support and resistance lines that I mark on a weekly and daily time frame. If the chart's tiny, if we have a brand new IPO or something a little bit more recent, then a lot of times I'll switch down to maybe a 4-hour or 1-hour chart and then mark those levels from there. But most cases use the daily and weekly time frames. So this is RVSN on a 1-minute time frame. And what we can see here is that these levels, it responded. So at first it came down here and it broke below this level, and I'll zoom in here, but we can see that we came down here and we just broke right below the level. So in this case, what I would be doing is often I would use this level and get an alert here, and it would say, oh, this one's hitting support. Do you want to take a look at it? I would pull up this chart and I would say, okay, so it's hitting support. Now let me watch the volume and let me watch the price action. So I'm looking at these candles and I'm looking for maybe a candle, a 1 minute or a 5 minute setup. Oftentimes I'll have the 5 minute chart up as well as the 1 minute. I love to reference the 5 minute while entering on the 1 minute. I'll just reference the 5 minute saying that, okay, this candle looks like it's starting to trend in the right direction on a 5 minute. So let me look at the 1 minute to maybe make an entry. So in this case, we're looking at a 1 minute chart. What we can see here is we were tanking down, we hit that level, we continued down, and you can see 1 minute candles continued to make new lows without breaking the previous high. Now this first candle here, where you can see it says long here, and I don't just blindly enter in because it says long. I don't enter in just because I see these little green dots, because this is just signaling that it's oversold on the RSI. But I have a very specific way. This is just general RSI oversold. I have a very specific way of determining if a stock is oversold or not, and that's something different for another video. But we can see here that this candle here, I'll zoom in to make it a little bit easier to see. This one hit a new high. So in this case, say we enter, this is what I would look for. So maybe I'd look for a lower risk entry that I'm near support, and I'm going to maybe shave at support, hoping to break through. This is basically anticipation of breaking support or breaking resistance at this time. So we broke support, we're going to go back up and test, and I'm looking for a break of that resistance now and to regain that level. So we can enter here. So if we entered at the high of this candle, this is 183, and say we put a 184 right there, a penny above. So we broke the high. This is the first 1 minute candle to make a new high. So first 1 minute candle to make a new high. If we put our stop below the bottom of these candles at 181, say 180 to be a flat, few cent break, that's a 3 cent loss. That's less than a 2% loss, and it's a very tight stop loss. But because this is near support and because it's becoming oversold, it allows for a very tight stop loss to be placed. So if the trade doesn't go my way and I have this 3, 4, or 5 cent stop loss, maybe I'll put a 10 cent stop loss on, then that's fine. Because if I get stopped out on 10 cents, but then later I make 20, 30 cents on it, it washes out the 10 cents, and it was worth the risk to reward here. So in this case, we ended up making new highs over here. So these are 1 minute candles. So 1, 2, 3, 4, 5, 6, 7, 8 minutes later, we then made new highs, broke this level, tested that resistance, and broke through. So we're over here, we're going up. It's not crazy, but we are up a few percent. We're up right there, just at that level. Within a few minutes, we're already up 2.5% on our trade, 5 cents a share. This isn't huge, but what this is this was a terribly bloody red market where we're finding opportunity based on support and resistance and getting chart alerts. But this here isn't the alert that we got in our Discord, because like I said, although this was oversold on the RSI, if I pull up the RSI here, and this down here, this little meter you see is RSI. Let me blow that up for us. So this is that area right here, and I'll blow it up. You can see that we touched down below that 25, which I have it set for 25 here. We touched below that, which is signaling it's oversold. Now, again, I don't just buy because it says it's oversold. I have a specific way of telling the RSI, and that's the alert that we got in our group. So the alert that we got in our group, let's see what time it was exactly. So this is 9:10. So if I look over, the alert was at 11:42 a.m. So we're looking for that. All right, we're over here. So let me zoom out a little bit. 11:42 a.m. we're looking for. So right in here, right there. This is 11:42. Okay. So what we're seeing here, again, I'll zoom in, make it a little bit better looking. Let me get rid of the volume candles here, make it a little cleaner. So this is the alert right here, 11:42. This is when we started getting our first alert. So from 11:42 to 11:48 is when we got our alerts on this, saying that this is becoming oversold. This is becoming too oversold, and it's time to maybe take a look at it and look at the price action and the volume. And in this case, what we can see here is, again, same idea. So we came down, we tested this level. This is a support level. So this is that support level that we got the alert sent to us. It was not only testing support level, but it was also oversold. So we have a support level that we already had mapped out, and we have it oversold. So we have two indicators of a possible scalp bounce. And I love these plays, especially in a red market, because again, they offer a lower risk entry where you're not buying at the highs. You're not buying. This isn't really a momentum play. This is a little bit more of a, reduce your size and get a little scalp bounce out of it, 5, 10 cents, 15 cents a share. But you're able to get a lot of these shares because there's a lot of liquidity, a lot of volatility on these lower flow, cheaper stocks in general. So in this case, same thing. So we came down here, and then we go ahead and we break new highs. So this is a first 1 minute high right here. So I'm going to go ahead and enter our trade, say 165, or maybe we waited for that right there, but we break up here and we're already in the green on our trade. Now, again, it's not a lot, but what it is, it's a lower risk entry. So if we put our stop down here at 160 exactly, and we entered right there at this break, 165, then we're looking at again, this is only a 2%, 3% stop loss. We're risking 3% there to then possibly make a return. So we're on this level here. We broke this level, and we came back down. We broke back above it. We got a little spike here, so you could shave some into profit there if you wanted to on your scalp. You make 6 cents. It's nothing crazy, but you make 3.5% on your scalp. And then we come back down and test those lows again. And this is great because oftentimes this will be an RSI divergence where you'll see that the RSI is actually trending up while the price action is still trending down, signaling that there is buyers and this is about to be a reverse. So that's an RSI divergence. If you see that, then that would be a third signal to possibly go long on this for a scalp bounce. For the sake of that, you're in a support area, you are seeing RSI divergence, and you are RSI oversold to begin with. So 3 indicators there. So this is one way of doing it, entering on a 1 minute break of highs, and then putting your stop below, either where you're comfortable, 10, 15 cents on your position, or maybe you're putting your stop just below the previous 5 minute candle or previous low of the day. So in this case, we came down, and then what's great here, another thing is we actually have another support level not far from this. So although we broke this support level, we have another one here. So like I said, these lines are not exact. They are areas of value. So if we have an area of value here and an area of value here, then really the area of value is actually going to be in between. So if we look at it, this is actually the area of value here. So although this is our line that we made, and we made our line here, it doesn't just exactly touch that line and jump off. That would be in a very perfect world. And sometimes it does, but often it's not going to do that. So look at these as areas of value. So mark your support and resistance levels and use them as areas of value. So in this case, we could see that we had a little channel here of an area of value. So if that's the case, then we know that we could be buying in here, in this area right here, without a problem, because then we could put our stop loss just below that, $1.59. Maybe we're putting it at the $1.50, or maybe just below the $1.50, thinking that if we break below that $0.50, that's bearish. But this is how you can trade an alert like that. We got the oversold alert. It's starting to enter in that oversold area, and I'll show you why it did that. If we switch to a 5 minute chart and we look at it here, it's the same idea. So if I bring up the RSI, what you'll see here is the RSI came down and touched an area of value. So again, I made a line on my RSI oscillator, which is how I'll determine whether it's oversold or not, and I'll set an alert. And these alerts get sent right over to our Discord group. And If it hits our scanners, or if it comes down here and we start seeing some volume enter into the stock, maybe we see a 1 minute or a 5 minute setup, that's when I might take these trades and just get myself a 5, 10, 15 cent scalp in a nice little play, again, in a market that's really red. So this is really nice. So you can see here that multiple times it touched down this typical level of oversold. Anything over, under 30 is oversold, so it hit 25 multiple times. But for my personal preference, it's not technically oversold until it hits a historic RSI level of oversold, in which case it did here, and then we can see that we had a really nice setup in here. So same thing, we had the 5 minute break of highs. Maybe use the 5 minute below is where you're going to be putting your stop. We can see that we had a RSI divergence. As you can see, if I blow this up a little bit, let me see if I can make this a little bit bigger. There we go. All right, so what we can see here is on the price action that we're looking at here, we hit our low of day here, and that's the low of the RSI, okay? So when we hit our low of day here, which we actually broke the low here, our RSI was actually higher. Our RSI was no longer hitting lows, which this is RSI divergence. So use this in combination with your oversold alert to begin with to possibly make an entry. Now, if you are acquiring shares in this channel because you saw, okay, we're testing in a support area of value that I had marked previously, we are now making some new highs on the 5 minute chart. We can see here, this is the first after all these reds and all these lows. We finally broke and made a 5 minute high, and then we came back down, tested, and then make another 5 minute high. This nice green candle here. It's not, this is an engulfing candle for the most part, in which case, again, another bullish indicator. So this again is on a 5 minute chart using the 5 minute RSI as an oversold alert, then a 5 minute RSI divergence as a possible entry. So this is another example of how you could have maybe saw conviction in this trade. So if we switch over to a 1 minute chart, I just want to see one thing along that level as well. Here's another thing that's another bullish alert. Let me get the RSI out of here. Down here, again, when we came into our level of interest, maybe when we crossed and held above this purple 9 EMA, and the purple 9 EMA then crossed above the 20 EMA, excuse me. So the yellow is a 20 EMA, the purple is a 9 EMA. Here's another indicator here. We can see right in this area that we had a cross. A lot of traders will look at this as a really bullish move in itself, and this will be a bullish indicator to go long. So again, it's just stacking indicators to give you conviction into your trade, but the overall alert was what alerted us to start watching the stock. So these alerts are great because I just set them on the charts themselves. That way we don't have to be watching them 24/7, because it's tough to be able to be watching all of these stocks when you have 15 stocks that are going off one way and you have the whole market's going red another way. These are great opportunities because, again, it came down into our channel. It gave us the alerts. It gave us plenty of alerts that were really, really nice trades on them. It really turned out to be really great, and it was just a great setup. So we would then look at this to shave into these pops. So a lot of times when we first break into these levels, I would be shaving my position, taking my scalp out of it. You can see that if you're entering in this channel, say you just bought exactly on the line, you bear this 2%, almost 3% stop loss, it's only 4 cents. If you could bear that stop loss, didn't take that stop loss, came back up here to this 200 EMA, that's what this blue line is here, you got yourself 9 cents, which is almost 6% per share. Again, this isn't crazy, but this is within minutes after entering your trade. This is a lower risk entry, so you're not entering at break of highs. So you're not up here where you're saying, oh, this thing, everyone at open saying, oh, RVSN's going, it's going to hit this next level. Well, I hope it does, but it ended up hitting this $1.99, that $2 organic level, and it just dropped from there. So a lot of people got trapped in this situation. And so instead of buying the break of highs, this is just another opportunity to then mark your charts, look at support and resistance levels, and then possibly enter at break of 1 minute highs, break of 5 minute highs. Maybe you look for the 9 EMA to cross over the 20 EMA. Maybe you look for maybe a 50 EMA cross, which is right here, this red line here. So maybe these are what the levels that you're looking for, but the alert itself is what's going to give us the indication that the stock is now worth watching. So we're not just going to trade the alert blindly. We're going to then make a trade plan. So in this case, we did have, this is a really nice area, because once we broke back into this level, tested and kept this level, held this level here, this was nice, because what this is it allows us to get up to this this profit target. So we would shave our position, but we would hold a lottery with the stop loss being moved up when we're in the green. So although we would have a stop loss on it, we would no longer be taking a loss, because we'd be adjusting our stop loss into this level. Or you could just set a trailing stop loss on your remaining shares, and it will just trail with the price itself. But if we had this as our profit margin up here, and we had this as our entry, and we got in right at the line and sold right at the line, this is a 12%, almost 13% trade, and 20 cents per share. Again, it ended up breaking above that level and almost tested that next level, and it got back up to the daily highs and hit 206 high of the day. So if we got in all the way down here and you held your lottery pick, which it's rare that any of us can hold it all the way to the the peak of the top, you're looking at a 41 cents per share gain. This is a 25% gain on your whole trade here. And you can see how risk to reward setup, this is a really nice setup. I tried to add these alerts to Benzinga. I try to add them wherever I can, because these are chart alerts that I set for my specific trading. This is the type of trading that I do every day. When the market is grim and we don't have a really nice PR runner or press release that we can attach to a stock to really give it conviction on a trade, then I'll look for oversold plays, because they offer me a lower risk setup, and I prefer that in a market where I think that when we have a market or a pre-market like we did today, it was extremely slow. I think a lot of people are going to be in and out of their positions fast, and we saw the whole market was tanking down. So everyone's trying to take money wherever they can. So you can expect a lot of choppiness to happen in the market, a lot of up and down moves real fast. So this can be a benefit to us traders, but on a day like today, I'm not really buying the break of highs. A lot of times I'm going to be buying on support levels. I'm looking for lower risk setups to really manage risk on the trade. Another one that I want to go over, I think it was BTX. If I go ahead and pull that one up, let me go pull that one up for you guys as well. Scanner. And it was hitting our support level. So this is one that we shared in the Discord early this morning, and this is the same type of idea. It popped up, came back down, it then trended below a little bit. We could see that we made our first 1 minute high right here on this candle, although it was a 1 minute doji, so it's not exactly the candle you want to enter in on. This candle here, we can see it was a 1 minute high, and it was a bullish engulfing candle, so maybe this was a higher conviction setup here. We can see over here we have the purple EMA, the 9 EMA crossing above the yellow EMA, which is the 20 EMA. It also crossed above the red, which is the 50, and then up in the green, which is the VWAP. So you can see how the indicators then crossed up here, giving us a bullish move there. But right here is the break of 1 minute highs, and then it then regained support. So once it drops below, I look at this as resistance. It tested resistance, it broke, tested, broke, closed above, and that's when it finally started trending up that purple 9 EMA, then testing the yellow the yellow EMA, which is the 20 EMA. So you can see how, again, support and resistance, these are already mapped out for us. As soon as these hit our scanners, first thing I do is pull up the chart, start marking levels of value, and we can see this area of value here between 228 and 245 ended up being a really nice entry to then go long and make a scalp on this one. So if you're buying at this line here and you had this line here as your exit, then that's a strict trade plan of, you know, I'm going to enter in and exit, and the, you know, bottom line is I'm putting the stop loss down here, and that's it. Or maybe put it right below the next support down below, thinking that if we test that support and we don't hold, then I'm out of the trade. That's it. I cut the loss. In this case, you can see that we made 13% on the trade, 33 cents per share on this trade. And again, this is within minutes after the trade. But then it went up and made more highs from there. So say you went all the way to the top. Again, it's extremely hard to hit those peaks. This is a 54 cent per share trade, 22% gain on that one. So, and as you can see, it actually did hit the next level. So you see that we hit this here. This is our entry all the way up here. This would be our second level or second target. That's 24% there. It actually ended up going up almost $1, 78 cents per share, 32% on the whole trade. And again, this is using support and resistance levels, and then maybe a 1 minute break of highs or 5 minute break of highs. Now this one here is not an RSI oversold play. This one would be support and resistance level aiding us in our entry and our exits. It doesn't always work. Nothing does. There's nothing that works 100% of the time. But you can see how support and resistance is really going to help you in entering and exiting. So you can also see how we could possibly see pressure in this area here. So in this case, we ended up breaking right through, coming back down and testing. So when we break that resistance, it then is supposed to act as support. In this case, it did offer a little scalp. So maybe you missed the breakthrough, you bought back on the pullback, and then you got yourself a little scalp. That's 6% there. Now, this is a riskier trade. This isn't one that I'd often take after this run that we already had. I feel like this is the move that we wanted to capitalize on, and this is the move that a lot of us did end up doing well on. So again, you're looking at a 13% within minutes, a 13% trade in a market that is just really terrible. I think NASDAQ was down, I think 4% total today, and SPY was down a few percent itself. It's just red everywhere. So traders are just scraping around looking for opportunity. Short sellers are popping out everywhere. They're becoming real popular all of a sudden. I have nothing against short selling, but I just want to make it be known that there is still plenty of opportunity in this market for us low float traders on the long side. So keep in mind that these trades are just a few trades that I found in a market that was extremely. That's it for today's video. Make sure to hit that subscribe button. I'll see you in the next one.